Hey guys, I hope you're doing well and everyone's staying safe. If you're watching this, you're probably in your mid-20s based on statistics and analytics from YouTube, and you're in a position where you've got some money or you've been considering investing in shares or in the cryptocurrency market, but you haven't. Or maybe you have and you're kind of just looking to get some information or other people's opinions on the current economy and the share markets in general. Now, in this video, I wanted to have a chat to you guys and talk about how personally, and share a story from me personally, how greed actually made me lose a lot of money, and the reasons why, even though greed is a natural emotion for us as human beings, it generally works against us against us, and it's generally unfavorable when it comes to investments. So stick around to the end, as at the end of the video I'll talk to you guys about the lessons that I've learnt specifically from the money that I've lost and the trading mistakes I've made so far. So to get things started, I wanted to talk to you guys about why specifically greed affects or creates a bias. So when you're starting out as a new investor, it will often lead to, you'll fall into one of two groups, right? As a new investor, you're going to generally be really eager to buy your first set of shares because it's exciting, it's new, it's something you guys haven't done before, and you want to make some money, and you kind of want to get skin in the game, and you want to learn and ultimately make some money over the long term. On the other hand, if you're someone who has taken the plunge and have skin in the game, if you're a new trader, if you're a new investor and you don't have a plan going into buying these investments, chances are when you do see profits, you'll either again take the profits too early, or you'll be way too greedy and not have sold at all. So it's really important to think about how greed can affect you, and how you can end up losing a lot of money if you don't think about your personal emotions and situations that you hadn't really thought about previously. And I think the reason why this video is really important right now, and I wanted to make this during this time, is, as I've said in my last two videos, if you haven't checked them out, go check them out. A lot of people are interested in buying shares at the moment, especially when the news headlines is constantly, and the media is constantly telling us about how much certain shares have gone down, how much shares have gone up. So they're basically just covering any story where there has been, the share markets has resulted to big losses or big gains. It gets headlines, therefore gets your attention, and you probably don't even know how you ended up looking up shares, or you didn't really think about how you got to watching these videos, especially if you've just started taking interest recently. So it'll be interesting to hear your thoughts, especially if you've only just started looking into shares, how you guys actually came across or started looking into shares. Was it because of a news article or something that you saw said by someone who's investing, or news article that's coming out? So for me personally, I've gone through and made probably every single mistake you can think of. Because I run this channel doesn't mean that I'm necessarily a good example of someone who's making a lot of money from investments. In fact, I've lost a ton of money, but I'm still learning as much as I can, and I'm looking to improve and become more disciplined in my trading with the more information and knowledge that I have. So for me personally, I started investing in shares when I was about 19 or 20. Straight out of university, I was basically looking at how I could make some more money by investing the cash that I had put aside. Obviously at the time, even with back then when interest rates were 3-4% and even up to 5% on term deposits, I thought this was a terrible investment. And from all the reading that I'd done, from all the people in business, the general consensus was that leaving your money in cash was negative, negative EV, and it wasn't profitable to do this over the long term unless you were specifically saving for, example, running your own business, or equipment for being able to run your own business, or in your own education, or tools that will help you to make money. It's not a good idea to have a huge chunk of savings sitting in a bank account, which is kind of true. The only caveat I would say is you want to, especially when there's uncertainty in the market, you want to have at least 3 to 6 months of your salary in savings. It just gives you the flexibility if your car breaks down, if you need to take a holiday, if you need to transition into a new job because your current job is at risk. It just gives you so much more freedom, and it will take away a bunch of anxiety for you guys. So just general tips, but I'm getting a bit sidetracked here. Going back to a personal story for me, I got invested in shares at 21. I've said that, and then I, bought and sold a little bit, and used CommSec originally. Bought some JB Hi-Fi, household names that I'd already heard of, Commonwealth Bank, Flight Centre, that sort of thing, and I made a little bit of money in the short term. However, I realized after looking at my brokerage, looking at my increased enthusiasm for it, I started trading more often and trying to time the market. So originally I came in with the plan to invest over 5 or 10 years. However, I started seeing myself making, 30, 40 trades a year, which is just insane. So when I looked at it overall, between the ages of 20 and 23, those 2 years, I basically lost about 5% of my total capital, and in my mind, I had thought I'd actually made a profit. So once you factor in all the brokerage fees of over trading, and then also, that alone will eat into your profits, and then also just trying to time the market with too short of a time frame. So that brings me on to my second point. If you guys are investing, the questions to ask yourself is, what are your goals? Like, what time frame specifically do you have in trying to, invest in shares, whether it's Australian and ETF or the US stock markets? What time frame do you guys have? What are your goals in terms of making a profit? Is this going to be a plan that you can stick to? So like, for example, a good analogy is if you set out to invest a certain amount of dollars, and then you have too ambitious of a goal, you might not be able to sustain that over the time frame you expect. So it's like saying, I've never gone to the gym before, but I'm going to start going 6 or 7 times a week, and I'm going to do that for the next 8 years. So like, these are really ambitious goals that you have to work your way up to. So use this analogy to think about what time frame you want to invest in shares, what goals you have in terms of profits. So if you're young and you're willing to take more risk, then obviously you may consider picking individual stocks. If you're looking to have a set and forget strategy, then you might consider buying an index or an ETF which follows an index, and essentially is a basket of stocks, keeps you diversified, and you can buy this with every wage check, for example. So that is my advice in terms of, if you fall into the latter group, which means that you potentially have some savings, you're at university, you're starting to work your first job, or you're about to go into full-time employment, you don't have too much time to look into stocks, but you do want to get skin in the game, I would recommend looking specifically into what ETFs are. So in Australia, there's Vanguard services. There's ones that have a mixture of Australian stocks, there's ones that have exposure to US stocks, and then ones for emerging markets. So I won't go into that in this video, but that's where I would start. ETFs is your friends if you're looking for low maintenance, low fee investment. All right, so if you guys have made it this far into the video, I'm really appreciative. I want to share my story about how I lost money by being too greedy, specifically with cryptocurrency and Bitcoin. So I got introduced into Bitcoin in June 2016. So that's the very first time I bought Bitcoin through BTC markets. And with the volatility, I'd never been introduced to this kind of these kind of swings. And in a very short amount of time, I made a lot of money and I lost a lot of money, right? So I made the same mistakes I was making in share trading, which is over trading. So number one, avoid over trading. Number two, if you're getting yourself into, volatile assets like cryptocurrency, understand that they're speculative and there's a good chance you're going to lose a lot of money. They're heavily manipulated. So I found myself coming into it just buying on the premise that it's going to go big, it's going to go up in price, and it did for a short period of time. I invested my hard-earned money. I took a lot of my money out of shares, put it into cryptocurrency, and overexposed myself way more than I'd like to admit. And I can actually say that at the highest point in July 2017, at the peak of crypto, when Bitcoin was 20,000 USD, all-time highs, I had $416,000 worth of crypto that I could have cashed out, obviously after tax and all that sort of stuff. It's still a life-changing amount of money, especially at the age of 27, right? So since then, well, actually, before I move on too quickly, I lost that money essentially by, it takes a certain, let me explain the psychology behind this. So in order to make that kind of money, so to make multiples of your money, for example, making 5-fold, 10-fold or 20-fold, which was common in the case of cryptocurrencies, in the time frame of less than 12 months, that distorts your sense of what profits should be and how much money is worth to you. When I had 400,000, I said that, once I make $1 million, I'm going to take out $100,000 and take 10% and then keep the rest, right? Sounds sensible. However, when you're young and you haven't planned for this situation, you've never had this kind of income, it is almost impossible for you to, make unbiased decisions and take profits and stick to a trading plan. So I unfortunately held all the way down to the bottom, and a lot of people ask me, why didn't you sell when you saw the prices going down? You had a long time to do it, which is true. However, having it programmed into my mind that you have to hold the asset in order to make that kind of money, you need to be able to see through 50% swings, which was normal. Bitcoin often would drop 50% and then continue to rise another 300% after that. So keeping this in mind, my mindset was heavily distorted into thinking that it's possible to make more money even after this drop. And to cut a long story short, I lost 90% of that $400,000. And I'm working my way back up now, and I'm trying to be more disciplined. But if you're starting out, the lessons here is, if you're going to invest money that you can't afford, just don't. It's going to keep you up at night. It's going to create unnecessary stress. And even so, if you're investing money that you can afford to lose, have a plan. Think about, it's probably less important to have the right plan as it is to have a plan and to stick to it, especially if it's a long-term strategy. If you're going to buy for 20 years, what are you going to do if you need that money? Are you going to invest periodically, every single month, every fortnight, every week? You need to factor in fees. Do your research, make a decision, stick to it. and you guys will be profitable. So my lesson, if I could go back, I would still invest in Bitcoin, honestly, I would say. And the lesson I would take is take profits, right? So create a plan. If I had at least said, when Bitcoin reaches 3,000, 6,000, 9,000, 12,000, I would take out a percentage of profits and cash that into cash. And also, if you have to, take that money out, cash those profits, take it out from the ATM, have that stack of money in front of you so you know that it's real. This is like, I don't know where this has come from, but I've heard and I can see why this would make sense, because when I was invested in cryptocurrency and I had $400,000, to me it felt as if I only had $4,000. It was the same. You know, while I did have the cash, I didn't have the cash because they were just paper gains and eventually paper losses. So I would say from time to time, it's a good idea to cash out your profits so you can remind yourself that this is actual money and you need to treat it accordingly. Be sensible, be responsible with your money and your investments. And you know, you guys will be way ahead of the herd and you guys will be in good stead. So anyway, I'm going to cut the video short there. If you guys got something out of this video, or if you've got your own thoughts on how you're going to approach investing over the next couple of years, especially as a young 20-something-year-old, I'd love to hear it. If you guys got something out of this video and you enjoyed it, please give me a thumbs up. It helps the video. And also, as always, drop a comment, any feedback, any thoughts. Even if you just enjoyed the content, it's really appreciated by me. And I'm overwhelmed by the support I've had so far and the constant positive feedback I'm getting from these videos. So stay safe out there, and until the next one, I'll catch you guys later. Peace.